Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Smash that like button. Subscribe if you already haven't. And just a little disclaimer. Nothing should be construed as financial investment advice. These are just my opinions and thoughts on the market. Let's get into today's action. We'll eventually get into big stock market news, which it's pretty big. So anyway, today's economic data: NFIB Business Optimism Index 97.4, less than consensus, shows sentiment's bad. It's just bad. And then the Red Book, which I'm not that big, but 7.2%, which is like the Red Book sales year over year. Uh, so if you look at it, it just keeps going up. What I've never seen uh never really looked up same stores index. So retail, it's a bunch of retail stores. So yeah, it keeps going up. And if you look at it, look at this chart. This is actually a pretty cool chart. It just keeps going up. So look at that, 2022 all the way down. And oh, this is just February. So not a big, let's do like a 5 year. Yeah, this is a 5 year grade. So till it goes up, but then it started coming down in 2022. It's sort of flipping. So you can tell the economy's not doing great. But anyway, uh, these are just a couple interesting things. We're going to get into the price action, but I found this interesting. And this is more of a long term bubble. And I don't expect this to be dealt with till next year. Not next year, later this decade, like the 30s. But the world suddenly has a plausible alternative: the U.S. Treasuries. This is the only thing about crashes. Like when they start going, they go and they go quick. I've lived through the '08 crash, the tech crash. I mean, I wasn't actively trading during the tech crash or actively investing, but I've lived through two crises in my lifetime. I mean, you can count Black Monday, but I was a little baby. That doesn't count. But I've been through two crises. So look at this. Treasury bonds are facing serious competition as a destination for global funds. So I mean, maybe don't criticize everyone. I mean, maybe that will. So comparable rates to both Europe and Japan have gone up, and of course they're talking about Germany. The German Bund. I don't know how it's pronounced. But here it is. They say it's more attractive. And I just found that strange because I always thought treasuries were a safe haven, and I thought that status would continue for the next couple of years. Like even during debt ceiling, to show how irrational the market is. During debt ceiling debates, people would flow into treasuries as safe havens, and I'm like, if they're gonna really a threat of default or fiscally irresponsible, why is money flowing into treasuries? It should be actually flowing into something else. Like gold. But I mean, to show how irrational the market is, they do it to treasury. So but for the first time, now I do think once this sort of cycle over within the next 1 to 2 years, I do think foreign capital will leave the United States and go somewhere else. And that means asset prices will start declining, but I don't think they're there yet. Uh, this I just thought was cool. Like I talked about Japan and everything, and look at this. They built a 3D printed train station. Want to talk about why they have such good infrastructure, what good everything. You can go back to my last podcast I talked. There is a culture of togetherness. There's a culture of They don't fire people. They don't do mass layoffs. Government intervenes in that. People don't leave as much either. So, I mean, it's not all the employer, it's also the employee. I mean, I remember growing up, they said that in Japan, that coworkers and bosses actually have really good relationships. So, uh, worker in rural Japan built entirely new train station. So, 3D printed and then assembled last month. So yeah, the population is like Japan is not without its problems. Like there are a lot of problems that should be addressed. I'm not here to badmouth Japan. I know people criticize and whatnot, but yeah, the workforce is shrinking. They're not having children. Dwindling numbers. I think there's a lot of things. I actually do think. I mean, maybe they could bring back arranged marriages. Like that might actually do good for. But I hear. But yeah, I'm not really gonna critique or whatnot. But world's first 3D printed building was going to be built here. So yeah, if you look at it, this is pretty cool. Japan, I mean, where is this? Where is this? Let's see. What country is this in? I think that's in Japan. Not perfectly. Oh, it's an island in Japan. So look at that. Made in Japan, transported in Japan. Beautiful. So anyway, just thought that was interesting. But going back to the markets, look at this. Fed's daily sees time to tread slowly, careful on policy. So look at this. No rush to cut interest rates. Of course, everyone wants to say it's the tariffs, but I think that's really what it was. But let's look at the market. This is bear market behavior, and I think this shows that the bear market's not over. Look at this. So right here is 520, 5,220 is where the market's at. Really opens at the high. No, where was it? It's around 5,000. Really opens highly. And I don't remember the Dow's at like 13 or 1400. Comes in, and then it starts selling off around 11. Keeps going down. Eventually, the market around 2:30 rolls over and goes down, and that is a bear market behavior. And I do think. I mean, look at this. They take the elevator up and the escalator down. That's 1 year, 219. This is just the S&P. If you look at this. Around six, it was around 6,111 in February. Look where it is now, 4,982. That's over 1,000 points shaved off. How long did it take? And that's within February, March, April. That's in 2 to 3 months. When was it last time 4,900? The last time it was 4,900. Now that was in January, so no difference. But this is still a long table. And remember this. This is just what I said, not financial advice. We're gonna go all the way to max. And of course, bull markets are the authors of bear markets. Same thing, bear markets are the authors of bull markets. This bull market, I personally believe, this is in February of 2009, the S&P was at $770. Look at this move. All the way up to 6,000. That is a massive return. you could have just loaded up on S&P 500 indexes all the way through. Just no pain at all. I mean, based on was there really? I mean, it did go down a little in 2011, went down a little in 2015. The first real sizable correction was in 2020 and then 2022. So I would say wave 1, 2, 3. This is probably wave 1. This is 2, which is negative 3, 4, 5. And that's the last one. And so, I mean, I'm not an Elliott wave technician. This could be all wrong, but based on what I would say, if you believe in the 5 wave theory, I would say 2009 all the way up to 2020 would be 1. The decline, which is number 2, that's in 2020. That's then 3. That goes to December 2021. And 2022, the bear market, that was 4th wave. And this is probably the 5th. So, I mean, that is, I would say, based on that. But I'm not an Elliott wave technician. It could be completely wrong. And going back to gold, let's just see where gold is right now. It was down today. It was actually up today, but then it finished negative. And this is what I said. If you go back to my premises, this decline will not come in, will not stop until they cave. The Fed cries uncle. And I would say look for 1 to 2 things. Either the Fed starts really lowering rates or the tax cuts. Under Trump's first term, I believe the tax cuts, if you saw 2015, there was sort of a almost petering out. And what happened was, from a tax standpoint, instead of actually having direct fiscal stimulus where the government just spent money and gave it, what he did was he lowered a lot of overseas. I'm not a tax advisor. This is just my understanding. A lot of overseas taxes and a lot of taxes so money could come back into the states. And that actually went straight into the markets. And that's why there was something called the Trump trade. Here, gold, I said, you have to remember, I sold some of my mining equities. Well, now gold's below where I sold it. Did I get the exact top? No, I mean, I didn't get the exact top, and this is why, this is the one thing. This is why I did this podcast, just to teach people what I learned. Let's go we can just do 3 months. Gold was around, it got up to 31,500. I sort of sold around, March. This is generally where I sold. It was around 3,000. I don't remember it. March 28th. That's sort of when I sort of sold it. And I didn't get the exact top, but look at it. It's way down. And this is why I set up targets. And now I do have some more in my brokerage house, and I have a lot more goals, but this is what I think. It comes here. I don't know when the bottom, it could be 2,800. It could be, let's do another 6 months. Could be 29, 28. I think it could go to 26. Now, one of my traders that talked about, he thinks it will go all the way to 2,100. If that's the case, then I'd say it's just going to come up around here and make another double top. And then I think a multi-year bear market could happen. I don't think it will go, but what could happen is goes to 2,600 and then makes it all the way up to 3,500. And that could be the top. I don't know, but if you actually go back to what I say, the next target I'm looking for, combined with the Huey, is silver. And when silver gets around here, 46, that's when I think gold equities, either hedge, if you know how, or stop losses, or that's when I'm going to take money off the table. I have aspirations for other things I want to buy, and I am going to probably get those. There's no guarantees in life. It can be completely wrong. The bull market and precious metals could be completely over, and the bull market and stocks could be continuing. There's no guarantees in life. It's only two: death and taxes. There's only two guarantees. Am I confident? Yes. But this is, and not only that, I'm not married to anything. When the facts change, I change. But anyway, that's all I have for today. We're looking at it. Still a bear market. This is really bad behavior. Let's look at gold today. Gold only is down $3, so that's actually positive, but it was up 30. But yeah, same thing with gold. This is not good behavior. It was way up, down, and if you look at it, this is the everything sell. This is the everything bear. You've heard of the everything rally. This is the everything bear market. Look at Bitcoin's at 76K. Let's do bonds. Google Finance, TLT. Yeah, even the bonds. Even bonds are tanking, so bonds, I mean, maybe international is going up, but I have to find a good index. We'll look at those. Anyway, remember, not financial investment advice, just my opinions and thoughts on the market. And I will see you next video.